Let's start with NVIDIA. NVIDIA is still going up. Take a look. This year is 44%. It's better than even Bitcoin. Take a look. Today is a little bit down, but why? Taking profit. And let's discuss what's happening. But Oracle, AMD, everything is up. But in the future, it's much more better. Let's read. Profitable NVIDIA CEO on Oracle reports. Let's see. CPU. They will be wonderfully profitable. NVIDIA CEO on Oracle reports CPU. Profit squeeze. Okay, you can read these details yourself, okay? Let's see financials. What's happening? Don't forget to subscribe, give like to this video. And we said many times about NVIDIA that it was time to buy, but still it's profitable. Let's discuss financials. Quarterly financials. Revenue 46 billions, net income 26, diluted EPS 1, net profit margin 56. That's why it's very good. In the future it's much better. Right now, take a look at some consolidation. Why? All-time high. Then VEO. If you don't want to discuss stocks, loan, you can invest in Vanguard. We discussed many times that it's cheapest ETF. 1 year, 70%, 5 years, let's say average. Almost 100%. You can calculate 100%. And let's compare to Schwab ETF, huge stocks, Schwab US large cap growth. It consists of good stocks, and let's discuss it, and how many percent in 5 years? Much better. You see, almost 25% a year. And let me show you. Let's discuss, let's see, and discuss step by step. Schwab US large cap, they track only good companies. They don't include small or for example, volatile stocks. They include only good stocks. First of all, expense ratio 0.4. It's low, almost the same like VEO. VEO 0.03. Let's discuss. Straightforward low-cost fund offering potential tax efficiency because you can get qualified dividend. The fund can serve as part of a core of a diversified portfolio. Simple access to large cap US equities that exhibit growth style characteristics. Yes, it's growth stocks. Stocks are classified as growth based on a number of factors. Let's discuss these factors. It was split, underwent a 4-for-1 share split, and right now it's very affordable, only $32. Take a look. Ask spread 0.03. Total value 11,000 or million shares. Okay. Premium discount. What type of discount? Do you know what that means? Premium discount. Let's see. A fund profile was created 2009 after recession. Total net asset 51 trillion billion. Total expense ratio, I told you, 0.04. Dow Jones. Okay, what does it track? You see, index name, Dow Jones US Large Cap Growth Total Stock Market Index. So it's not only one stock, 10 stocks, it's a lot of stocks. Let's see what type. Portfolio turnover rate, 26% large growth, passive. So we don't rate it back and forth, it's passive. And take a look. Distribution yield 0.37%. It's the same like dividend. SEC yield. What does mean SEC yield? Security, exchange commission yield. Let's see, what does it mean? Do not put in comments what does mean security yield. SEC yield is a standardized measure of a fund's income over a 30 days period, calculated by dividing income per share by the share's maximum offering price at the end of a period. It's the same like dividend. This metric is mandated by the Securities Exchange Commission to help investors compare income generating funds, especially fixed income securities, but just a calculation for dividends, interest expense over a short recent time frame. Not okay, it's the same like dividends. We know dividends 0.37. let's see the portfolio. Portfolio consists of Nvidia, 11%, the biggest, yes, share portion. Microsoft, Apple, all magnificent except a video, Broadcom. Broadcom 5%, big. Amazon. But let's discuss Amazon again. Amazon growth slowed down. Do you know the reason? Tariffs, a lot of competition. Let's compare. For example, Amazon 5 years. Let's see. It's not much, only 35%. So, how many percent a year? Only 8%. First of all, competition, then tariffs, and people don't buy like crazy, not so much money anymore. Projected Rainer could be a game changer. But what about the cloud? Do you remember? Walmart loses value as it battles Amazon in deals builds. Amazon, it's not growth stock anymore. It's already a big company. Take a look, their growth. Let's compare, for example, to another Magnificent 7 stock like Google. And do you buy Google with L or Google? Because it's a stock who can voting rights, class A. Take a look, the same, 5 years. 225%. How many percent a year? Almost 50%. Which one is better? Of course, Google. And take a look. Google has a lot of streams of income. YouTube, of course, Google ads, a lot of stuff. For me, Google is much more better as a business than Amazon. And let's discuss their financials. Revenue 96 billion, net income 28 billion, diluted EPS, earnings per share 2.31, net profit margin 29. And by the way, Google P/E ratio, price per share, it's only 26. Take a look. What does it mean? It means this stock has a lot of potential to grow. The less earnings per share, P/E ratio, the better. Let's read. Google's parent company Alphabet has a current trailing 12 months TTM P/E ratio is approximately 26, depending on the source and exact date. But investors are paying around $26 for every dollar for Alphabet. So it's not overbought company. Comparing, for example, to Palantir. Let's compare to or Amazon, for example. Amazon. So investor pays only $26 per each profit. Amazon approximately 33. Yes, more. That's why I think Google undervalued. What do you think? Put in comments. Okay, let's go back. Amazon, Tesla. Tesla is very controversial. It's like American roller coaster going up and down. Meta is good company. Alphabet class A. Okay, again, let's discuss Alphabet class A and class B. I will show you again. Let's read differences. It's mostly in voting rights versus Google. Let's see. You see, Google and Google with L and Google are stock tickers for Alphabet. Google's parent company different is voting rights. Google shares are Class A shares with 1 vote per share, while Google shares are Class C shares with no voting rights. If you're investor, small investor, it's not big deal. But if you're big investor and have a big share of companies, of course, it's much more better. Google is much more better. Dividend, both classes get the same payments. And don't forget, I discussed before about qualified dividends. Google versus Google dividends, because qualified dividends for Google with L, you have to keep it, I think, 90 days to make it qualified dividends. I think it's, yes, 90 days. When it's Google 60 days to be qualified. Holding period, yes, as I told you. 129 days surrounding the after the stock ex dividend day. It's for traders who sell and buy and sell. The ex dividend day is the day on or after which new buyers are not entitled to the dividend payment. Yes, with Google you have to wait longer before selling after dividend paid. To have dividends qualified as the qualified dividends and not to pay high taxes. Again, I will show you what is mean qualified dividends. It's very important for tax purposes. Let's see, qualified dividend. Qualified dividends are a category of dividends that are taxed at lower, more favorable long-term capital gains. Because long-term capital gains rate is much more lower than ordinary income. That's why, of course, everybody wants to be taxed using this lower rate. Okay, take a look again. Holding period. The investor must hold the stock unhedged for a minimum period. For common stock, this period is more than 60 days. For preferred stock, so with 90 days. During the 181-day window around the ex-dividend date. REITs, real estate investment trust. If you invest, yes, it's not qualified dividends. ML, a tax-exempt organization not well qualified. Is it mutual fund? What does it mean? Let's see. And tax rate, you see, you can pay even zero taxes if you're single and up to 48,000. Zero. That's why to be taxed with lower tax brackets is much more better than ordinary income. Of course, broker will do everything, will organize everything, but you as a trader, investor is responsible. You are responsible for organizing and for all tax loopholes, say like this, benefits. Okay, let's discuss, for example, if you are single, you can get up to 48,000 and not to pay taxes at all. You see, long-term capital gain for qualified dividends. That's why it's very important that all your dividends are qualified. Otherwise, it will be taxed as an ordinary income with much more higher rates. Read, brokers report ordinary qualified dividends on Form 1099 dividends. You see, qualified dividends are taxed in the year received, even reinvested. For example, if you reinvest. The same about VEO, because some people said if you use VEO, qualified dividends, you don't pay taxes. No, unfortunately, for investors, you have to pay qualified, even if it's reinvested. Okay, let me show you. Yes, the dividends distributed are qualified, eligible for lower taxes with a very high percentage, for example, 97% being treated as qualified dividend. The same about Schwab. I will show you Schwab fund. We just discussed about this fund. Growth. Yes, you see? That's why, for example, if you hold it for long, for example, you hold stocks, underlying stocks, and even if you invest dividend, but still it will be taxed as at lower long-term capital gains rate, 0 if you're up to 48, 15 or 20%. I think it's very good. Okay, so let's go back. So Google LLI, to 2%. Wow. Let's discuss this company. What can you say about this company? I see everyone. Hello, 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 guys. Put hi in comments. And what company do you invest? How much money do you make? Let's discuss 1 year. Oh, it's negative. 200%. Not bad, but again, all this growth was when? In 2020. You see, like crazy. 2023. Interesting. What will it be in 5 years? But first of all, let's start with financials. Quarterly financials. Revenue 15 billion, net income 5, diluted EPS 6, net profit margin 36. Good. When is next earning calls? October 30, in 3 weeks. But this year, let's see how much money. This year is negative, I think. Yes, it's negative year to date. Only 8%. But why technology, of course, much more better. Because take a look here. I'll show you this company. Growth was exponential here during COVID, you see, and 23. And right now, slow down. Really to invest over 1 billion in India to expand manufacturing capacity. Effects. Rotational strategy timing. Okay, let's see. Where will Eli Lilly be in 5 years? Because we are looking for a long-term period, not daily trading. What's happening long-term? Okay, I see questions about gold. Yes, we discussed right now. And how gold taxed. Because it taxed differently. Yes, thank you for your question. We discussed it. Take a look back in 2023, 2024, tax of Eli Lilly skyrocketed over investor excitement surrounding the potential of the pharmaceutical company GLP diabetes. It's for weight loss and weight loss therapies. But since when wore off, it's been a different story. Competition, Novo Nordic. But again, if you invest in international stocks, you have to pay taxes in that country as well. Pharmaceutical, any pharmaceutical, always risky, going up and down. Because FDA approvals, some reports, some deaths, and you can lose money. My lovely Nvidia. Nvidia is much better, I think. Why Marvel stock can outperform? Marvel Technology, no skates, technological companies. Of course, Nvidia much more better than AMD. I see your questions about AMD. Let's see. AMD. OpenAI, new chip deals. Rise a tough question. Where will all the power come from? Yes, where? CEO Lisa, Su, Jinhu, John Taylor, Chief Marketing Officer. He's in Texas, Austin. But this company is good, but still not so profitable like Nvidia. Let's see financials. AMD announced Ryzen Embed 9000 series. For industrial computing automation platform. Let's compare AMD versus Nvidia. This is AMD and versus Broadcom. Let's see, let's compare. Let's compare all these companies. Nvidia, 4.5 trillion. You see market cap. Do you remember how to calculate market cap? Price per share, calculate by quantity of shares. That's why, for example, Nvidia, much more bigger cap rate than 1 trillion Broadcom. AI focus dominates And by the way, AMD advanced micro devices only 343 billion. Again, AI focus dominates high-end GPU market for AI training and data centers, competing in AI chips, particularly for inference workloads, and recently secured a major deal with OpenAI. Broadcom provides network equipment and custom AI accelerators for large tech companies. Diversification, highly concentrated in the AI GPU space, though its ecosystem is robust. Broad portfolio of GPUs and GPUs for customers, enterprise and data center markets. Highly diversified business spanning software, networking, and a wide range of semiconductor application. It's good, you see, diversified. But still, NVIDIA market cap is much more better. It's for investors. It's very important. Growth potential. Continued leadership in AI hardware drivers strong growth and high analyst price targets. Potential for slow growth as competitors emerge. Who's competitors? AMD and Broadcom. What about AMD? Significant upside as it challenges NVIDIA's market share and gains traction in inference. Analysts see stronger growth prospects over the coming years. But still, take a look, compare market cap. He's 10 times bigger, not even more. It's not 11 trillion, 343 billion. Again, NVIDIA market leader, ecosystem advantage. Its serious software platform creates a high barrier to entry for competitors. Strong financials, weakness how valuation, despite impressive growth, its valuation is substantial. Competition faces threats from growing competition from NVIDIA custom chips built by own customers like Broadcom. What about AMD? Competitive challenges as a key player, challenging NVIDIA dominance, gaming market. Recent wins secured a major deal to supply OpenAI with AI chips. Yes, it was today. Weakness, lagging profitability. While its market share is growing, it has lower profit margin than its competitors. Like whom? Like NVIDIA. GPU market position still significantly behind NVIDIA in overall AI GPU market share. Broadcom. Diversified business, less dependent on a single market segment due to its broad portfolio of products and software. Weakness, high valuation, valued at a premium, partially reflecting its steady earnings and AI explosion. Slow growth. Why slow growth? While still growing fast, its AI-related revenue growth is not as explosive as NVIDIA. Why? NVIDIA, like we discussed, has more benefits. Again, let's discuss. Strong financial ecosystem advantage, pseudo software platform. Let's see. Do you know about this platform? What do you think? Is AI is real boom or it's a bubble? What do you think? It's parallel computing ecosystem developed by NVIDIA that allows developers to harness the power of NVIDIA GPU for general purposes, high performance computing. Did you read about it? It's a toolkit which provides libraries, drivers, APIs. Let's see. Proprietary parallel computing platform and application programming interface that allows software to use certain types of graphics processing units for accelerated general purpose processing, significantly broadcast via utility, significant performance computing. But still, NVIDIA is much more better in this system. But competition is high. Competitors are approaching, like AMD, Broadcom. We'll see. Okay, let's go back to this. Eli Lilly, but again, no, it's only 2%, not big deal. Percentage of portfolio: information technology, almost 50%. Communication services. Where is communication service here? No, it's okay. It's 15%. Consumer discretionary, healthcare, financials, industrials, consumer staples, materials. Materials, what is it? Home Depot? What do you think? Materials, real estate, utilities. What does it mean? Computer staples. Sector comprise companies that produce and sell essential goods for food, beverages, and household products. Okay. A relative constant. Yes, because people cannot survive without food, for example. Yes. Regardless of economic climate, making them. Which one? Target, Walmart. Yes. No cyclical demand, stable revenue streams, low volatility, consumer dividends, low growth, high competition. The major factor by competition can intense, especially in price sensitive areas. Okay, let's go back again. When market cap more than 70 million, percentage of portfolio, you see? So mostly concentration of technology, you see? 50% technology. And again, what company? Magnificent 7. Do you remember? Nvidia, Microsoft, Apple. This is not Magnificent 7. Amazon, Tesla, Meta, Google. We have different shares, you see? Alphabet, Google and Google. And let's see distribution, dividends. A distribution almost the same, 0.4, you can say. Not bad. Because a growth company, they don't pay high dividends. For example, let's compare dividend HD. We pay high dividends, but we don't grow much. Schwab US dividend equity ETF. Negative even 5 years, only 40%. 9% a year? No. But what about how much we Schwab US dividend faces challenges with zero returns? Wow. How is possible? No, that's why I prefer growth. High performance stocks face streaming due to 4% cap rule. Remains popular for its 4% dividend. No. That's why this one is much more better. Why? Because we're concentrating on growth company, big company, because a lot of company they don't grow. Take a look. For example, people said, oh, I want to invest in Novavax, but it was a huge spike during COVID. Let's see. Do you remember in 2020? Here. Yes, you can buy for $90 when sell for $300. Take a look here. But when it went down, take a look, it's only $9. It's crazy. The same about, again, Walgreens. And Walgreens significantly went down. That's why stocks. I don't know why it doesn't show. W. Yes, Walgreens. But where is stock? 1 second. Let's see finance. WBA. What? 222? No, it went down. I don't do you know why does it say shows to Max was here. Okay. No. I don't know what is it. It's not correct. Here, for example, it went down. I don't know why it shows like this. W. 1 second, W. It's a Walgreens stocks. Stock price. 11. But why it doesn't generate? Not okay. Let's see market watch. It went down significantly. That's why this type of stocks, I don't like it. You see, I see your questions about Starbucks. Starbucks is down as well. So right now it's technology, artificial intelligence. For example, take a look here. Starbucks went down 5 years negative. 1 year, 15%. That's crazy. And Starbucks lost stores. Do you remember? Starbucks stock price down 4%. Here is why. We know because people losing money. And take a look about financials. The most important financials down 47% net income. Wow. Diluted EPS 0.49. Net profit margin 5% only. Earnings call. Next earning call. When will it be? Previous June. Take a look. And miss 22%. Again, technology, and if you don't understand different stocks, just invest in this fund. And again, see links below for Schwab and Fidelity, and you can make a lot of money. Subscribe, give like to this video, and see you next